at the end of the day, the authorities will respond with printed money if there's a financial calamity. So whether or not Bitcoin and crypto gets ahead of that by saying, okay, well, rest of the markets are melting down, we believe that there's going to be financial stimulus. Bitcoin's a very liquid asset. People have a lot of illiquid assets on their books, especially if you're an investment manager. So if you have some Bitcoin, you dump it. If the basis comes down even further than where it is today, sort of that's the difference between Bitcoin and futures contracts. You see large hedge funds like Millennium and these pod shops who put on this basis trade, starting with the ETF launch earlier this year, unwind those positions and sell Bitcoin spot into very illiquid markets. So I think Bitcoin goes down with the rest of the markets.
Following the recent Federal Reserve's 50 basis point rate cut, analysts are bullish on Bitcoin's recent price movements, predicting a big rally to new all-time highs in October. The cryptocurrency's optimistic start to 2024, with a 30% year-to-date advance, was driven by bullish fundamental drivers like the introduction of spot Bitcoin exchange-traded funds on US exchanges and the quadrennial halving event, which cut the incentive for miners from 6.25 Bitcoin to 3.125 Bitcoin. This upward trend is consistent with experts' opinions, such as Arthur Hayes, who sees substantial potential for Bitcoin's growth. Hayes, the former CEO of BitMEX, stressed Bitcoin's potential benefits during a financial crisis, anticipating rising value in the face of a traditional market collapse and urging patience, active use, and decentralized ecosystem maintenance. According to Arthur Hayes, in the case of a financial crisis, the government will most likely respond with printed money, and Bitcoin may gain from this situation by rising in value even while traditional markets collapse. Hayes points out that Bitcoin's liquidity makes it an appealing asset for investment managers looking to exit holdings amid a crisis. However, he adds that huge hedge funds have already used basis trades to sell Bitcoin spots in liquid marketplaces. Watch clips from the interview to gain further insights into Arthur Hayes' discussion. Please like, subscribe to our channel, and turn on post notifications for more exclusive content. Enjoy the video.
At the end of the day, the authorities will respond with printed money if there's a financial calamity. So whether or not Bitcoin and crypto gets ahead of that by saying, okay, well, rest of the markets are melting down, we believe that there's going to be financial stimulus. So instead of like going down with the NASDAQ, Bitcoin goes the opposite and starts rising even as dollar yen strengthens and the rest of the global financial markets collapse. Bitcoin's a very liquid asset. People have a lot of illiquid assets on their books, especially if you're an investment manager. So if you have some Bitcoin, you dump it. If the basis comes down even further than where it is today, sort of that's the difference between Bitcoin and futures contracts. You see large hedge funds like Millennium and these pod shops who put on this basis trade, starting with the ETF launch earlier this year, unwind those positions and sell Bitcoin spot into very illiquid markets. So I think Bitcoin goes down with the rest of the markets, but quickly, as we sort of see a financial collapse in the early stages, Bitcoin will say, okay, I believe that the markets will respond positively to more printed money. Janet Yellen and Jay Powell can afford a financial collapse a few weeks before the election, especially if they want Harris to beat Donald Trump.
Could it hit $1 million next year?
Sure, but I don't think it will. I still have I have $1 million price target. I'm more of a 2026, 2027 sort of person. I think next year we really get a ramp up in fiscal spending, regardless of who wins the U.S. election. And if the U.S. dollar declines a lot, then China has room to enact stimulus as well and keep the yuan stable. And then you have the rest of the other major central banks are following in the footsteps of the Fed. They look at the Fed, oh, they're easing, so we can ease too. We can do as much as the Fed is, and our exchange rate isn't going to get trashed. And so that's what I think happens once you get the new president, whoever it is in the U.S., because both Harris and Trump are committed to spending lots of money. I don't know how long this cycle is. Really, it depends. But I believe that if you think about the global reserve currency, the U.S. dollar, and all the wars and all the spending that needs to happen to keep the system intact, we're at this precipice where you can go either way. You could have a sort of a massive austerity, massive deleveraging, maybe a revolution, or the authorities can try to keep things stable by fixing the price of government bonds and printing as much money as possible to placate their electorate, whether that's in the United States, that's in the EU, that's in China, that's in Japan. Every single major economic bloc or country runs a similar sort of fiat fractional based financial system, regardless of whether they're democratic, autocratic, communist, capitalist, whatever. Those are all sort of smoke screens. At the end of the day, everybody prints money. Everybody has a fiat fractional banking system. Everybody needs inflation. Everybody needs to take their savers' wealth and steal it so that the government can afford its spending programs, whether that's to fund wars or that's to do, Green New Deals, or it's to onshore production, or it's climate change policies, or it's, welfare payments to the poor individuals who are losing out in sort of this economic transformation, AI and all this kind of stuff. There's so many reasons why the government needs to spend money and not try to tighten its belt and restore confidence in these fiat currencies that we exist with.
Can they continue to just keep things going?
Sure, and Bitcoin can go to $1 million to 10 million. Bitcoin's what, 1 trillion dollar market cap. It's magic internet money that was created out of thin air, starting in 2009. Bitcoin is the antidote to what has happened. Yes, okay, they've printed a lot of money globally, the US being the most egregious with it, and the reaction has been Bitcoin. And we have this cryptocurrency ecosystem that has thrived based on all this printed money. And we have all these different types of assets that are created and have value because we have such a up financial system. So I wouldn't say they're getting away with it. Bitcoin's a smoke alarm. It's telling us that there's something wrong here.
Arthur Hayes emphasizes the value of patience in cryptocurrency markets, referencing investors' desire for short-term gains. Bitcoin's value will rise over time due to money production and currency devaluation. Hayes sees ETFs as appealing to passive investors who want price performance without physically owning or utilizing Bitcoin. He observes that BlackRock's ETF clearance was most likely due to alignment with government interests, which might lead to wealth appropriation and centralization. Large institutions, Hayes contends, act as extensions of government authority, allowing for easy wealth appropriation. Hayes supports the increased use and usability of Bitcoin through efforts such as ordinals and DeFi to sustain its value. Miners rely on transaction money to keep the network running. Financial institutions use cryptocurrency to generate fees, such as custodial services. Arthur Hayes points out that active usage, supporting its decentralized ecosystem, is critical to Bitcoin's success. Let's go back to the interview and watch more clips to gain insights from Arthur Hayes.
What are people not talking about enough?
Patience. I think everyone is, Bitcoin needs to go to $1 million today, next year, because I took a bunch of leverage, or, my whole net worth is in this particular cryptocurrency. And, they hear the things, but the imminent collapse, all the debt, and they're like, well, why isn't it happening yet? Why not now? Like, I see all these things. I believe what you're saying. It's super fucked up. Politics is fucked up. Finance is fucked up. And why isn't, Bitcoin responding? Or why isn't the crypto that I own responding? And I think it's just patience, right? It's been a little over a decade, and we've created this entire new financial ecosystem. We have millions of people around the world who have Bitcoin, Ethereum, Solana, whatever, wallets. It's a very successful financial experiment to date, but it's not going to just all of a sudden just go to some ridiculous value just because you have a lot of leverage or you bought a lot of it yesterday. So I think patience is something that people need to understand, because if you believe in the math and the law of, compounding interest, then it's inescapable. The system must print money, must deflate, must, debase the currency to attempt to survive. And every other major civilization has done the same thing. And at the end of the day, inflation is hoisted upon the people, and some sort of revolution happens. So the history is 100 for 100. Just wait. So I think at the end of the day, ETFs are for people who want the price performance of Bitcoin. They don't want to own Bitcoin. They don't want to be their own financial institution. They want to outsource that to Larry Fink, BlackRock, and all these other major institutions, which is fine. Bitcoin, you can do whatever you want with it. What does that mean? You're a passive investor and you're not actually using the protocol. So if we take this to the extreme and every single Bitcoin is owned by BlackRock or a similar sort of institution, then the network goes to zero because no one's actually using it. So the reason why Bitcoin has value is because we use it. It's not like gold. I can hold gold in a vault for eternity and it's still gold. It's still a chemical property of being gold. If I don't do anything with the Bitcoin, then the miners don't get paid and the network dies. And that's a fundamental, a very nuanced difference between Bitcoin and gold, which I think is not a problem today. It could be a problem in the future. But at the end of the day, if you're thinking about Why now? Why did BlackRock get in their ETF approval in 6 months, and the Winkle clowns couldn't get one in 10 years, right? They both live in New York. They're both billionaires, both very rich. Why weren't they given one and BlackRock was giving one in 6 months? Well, at the end of the day, you want the same financial institutions to control the wealth that can ultimately be appropriated by the government at the flick of a switch. BlackRock is just another arm of the US government, just the same as any other large Chinese asset manager is an arm of the Chinese government. And so if you're thinking about, I need to make sure that the wealth doesn't escape into this Bitcoin thing because it actually is very, very useful for the average person. Well, most people are lazy. They don't actually want to deal with being their own financial institution. So let me give them a very easy product that they can 2 clicks have the Bitcoin price appreciation, but not actually be able to move their money outside of the system. And so that's why these ETFs are around. That's where they're very successful because it's very easy to do. And the government likes them because all the money stays at the same institutions. And if they need to go and they say, BlackRock, now the tax is 50% on AUM, they think, here you go, government. And there goes your Bitcoin.
If this happens, comes to fruition, people aren't using Bitcoin, what does that problem look like?
It looks like revenue from miners goes down. It looks like, how do they afford the CapEx? Difficulty adjust, that kind of thing. I mean, I think it's a very long tail sort of situation if we don't have any use cases for Bitcoin. And obviously that's sort of why I love ordinals and, Bitcoin layer 2 DeFi, all these sort of things. Like, let's pay the miners, let's do something with this thing and create some usability for people so that people are using it, people are spending money, and we sort of take this problem and remove it as a problem from the future. They want fees. These are great fee generating machines. These are the most successful launch of ETFs in the history of ETFs, and passive investing dominates financial markets. So why do you see Lutnick, Cantor Fitzgerald CEO, stumping for Tether and Bitcoin? Because this firm makes a lot of money being a custodian.
Looking ahead to the US election, Hayes predicts increased fiscal spending regardless of who wins, resulting in a drop in the US dollar's value. He sees Bitcoin as a smoke alarm, indicating broader global financial crises. Historically, the Bitcoin halving event, which occurred 151 days ago, has set the stage for significant market increases. This tendency may continue as analysts discuss a big Q4 2024 increase. Following the Federal Reserve's 50 basis point rate cut, Bitcoin's price dipped below $60,000 but recovered to $62,319, a 4.2% daily increase, indicating sustained growth driven by market mood and global economic developments. Analysts like Michael van de Poppe and Jelle predict a new all-time high in October if Bitcoin sustains support above $58,500. Van de Poppe indicated that staying above this level will pave the path for a new all-time high in October. Jelle shared this opinion, forecasting a return to price discovery next month, citing parallels with the summer of 2023. Critical factors influencing Bitcoin's price include the Federal Reserve's rate drop. Historical trends of post-halving price rallies indicate a possible upward trend. As market observers anticipate October's potential breakout, Bitcoin's resilience and capacity to endure economic stresses continue to play important roles in its price movement. Bitcoin's price has risen significantly during the halving, reaching a record high of almost $74,000, prompting many market analysts to predict a supercycle within the current halving year. As we conclude, the big question remains, can Bitcoin's decentralized nature survive increasing institutional investment and government regulation? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching, don't forget to subscribe.